Hello and welcome back to Bunnex Investment Group. In this video, we are going to be talking about a simple 20 pips a day forex trading strategy, which is stress-free, applicable to trading with no much experience, with an accuracy rate of up to 85% and respects a 2:1 reward to risk ratio and requires less time in the markets, both on looking for setups as well as trading management. So if you want to know and comprehend all this stuff, you need to stick up to the end of this video. But before we jump into the whole video, make sure you check out our free Telegram channel where we share free signals, advice, as well as our announcements. On that note, let's actually jump into our today's content. So this stress-free 20 pips a day forex strategy looks at only three things. The first thing is to notice the Asian range, right? Noticing the Asian range. Some would love to call it the Tokyo session, or yes, we may say it's the Tokyo session range or the Asian range. And after having that range, we need to see an induction move outside that particular Asian range, and then a stop hand to the 50% of the Asian range. So what we mean is, let me try to simplify. So we need to see first, we need to see an Asian range. After an Asian range has been issued, the high and low of the Asian range, we need to see the market come out of that particular Asian range like that, right? Like this. It went out of the Asian range, is the price, and after we call this an inducement move. So it's Asian range first, inducement move, and then pull back to the 50% of that Asian range, like this. So we would say the market will need to come back to the 50%, and that is where we will look to get into the market. So this becomes our zone of market interest. So the three things that I've said are the Asian range, inducement move outside the Asian range, pull back to the 50% of the Asian range, and then our entry. In this case, it will be a short entry. So to fully understand, let's actually have an example, examples of this particular trade from December 30, 2021 up to the current point that we are in the market on Euro US right now. So I'm using an indicator on TradingView, which is called Asian Session High Low Midlines. So you just come and type this particular name here on indicators, and you get this particular indicator. So in this case, we can see that the market actually issued an induction move, right? An induction move is defined by seeing impulsive candlesticks outside, or sometimes they may not blow outside with a higher magnitude, but you need to just see impulsive candlesticks outside the Asian range. In this case, we went down. It was an inducement move, and then this is the 50% line, which is already marked by this particular indicator. The market went back to that 50% region of the Asian session and gave us a bearish engulfing pattern, which was actually our entry point. So from that point to this point, that is where we would expect to get our trade, and it should be, in this case, we had our 10 pips stop loss, right? Then our, sorry about that, our 20 pips was somewhere at this point. Therefore, our trade was going to work out with one M15 candlestick move like that. So it was a win. Then on the following day, we need to see an inducement move whereby we see candlesticks that have an impulsive move. In this case, we can see actually going outside the Asian range, and then the market went back to the 50% of the Asian range. At this point, we had this hammer at the zone of market interest, and it was fit for us to actually go long at that point where we saw this M15 candlestick, right? 20 pips, and our 10 pips stop loss was at this point, and we now had two trades that you could actually take at the end of the year of 2021. So it's now two trades, and it's actually 4R in your favor. And at this point, we can see that the market actually attempted to induce at this point, right? It induced to the downside. Then after that, we saw the market actually coming back to the 50% of our Asian range. So this particular candlestick pattern could actually become our entry trigger, or we could wait and see this particular bearish engulfing pattern. Unfortunately, we couldn't know that this was going to come. Therefore, our entry point was going to be a short at this level, right? Our 10 pips stop loss and our 20 pips at that point. And it was our third entry, right? Then we went ahead. We can see at this point we had an induction move outside this box, and then a retest of the 50 EMA, actually sorry, 50 percent of the Asian range, and our entry was going to be a short at this point. These candlestick reversal patterns, which were hammer, you name them, some called them morning stars and so forth. There are very many names that can confuse, and it was another trade, right? At this point, we can see that we had an inducement move like that. We had a move to the upside. Unfortunately, we were expecting to see the market to come back to the 50% at this point, and to the 50% at this point, and continue going up. Unfortunately, the market did not do that. It decided to continue going up. So we were waiting to see the market to come back to this point. Therefore, this was actually a miss, right? Then this was now on 6th January, and on that 6th January, we probably had a losing trade because we had this induction to the downside. After an induction to the downside, we were waiting to see the market come back to the 50% of the Asian range for us to enter a short. However, the market actually hit our stop loss, as we can see that it shot up, and it was actually a losing trade on this particular day. Then this was actually the 7th of January, which is the end of the first week of 2022 trading year. We had a beautiful opportunity on the NFP day. On that particular day, we actually had this inducement move to the upside, a retest of the 50 EMA, this candlestick, which is in green, a hammer or a shooting star, you name them. I don't know names. Then our stop loss was going to be 10 pips at this point, and we were going to have our correct trade. So out of all the trades we've marked, we can see that we lost one and we missed one, and all the others were winners. So basically, that is what you'll be doing. You need to see the high and low of the Asian session range. After that, you need to see a breakout of that Asian session range, or an inducement move outside that Asian session range, and then the market must come back to the 50% of that Asian session range, and that is where you would look to get an entry. So of course, like any other strategy in forex trading, it's not 100%. You need to have your risk management in place for you to actually make money out of this particular strategy. On that note, we come to the end of this video. Subscribe to this channel if you haven't done so, as well as sharing with someone. See you next time.